Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. There actually is not a lot to report in regards to news involving the cryptocurrency market today. Last week was particularly eventful. We had the US CPI, which came out lower. Markets initially got a bid as a result of this. And then essentially we had the Fed, the FOMC meeting, which really put everything back in its box. And in my opinion, has now sort of started or set the pace for the rest of the year, which I think is going to be rather negative for assets. We've looked at the stock market on a number of occasions and said that this looks like now it's on its sort of next leg lower. I do still believe that that's the case. We looked at Mike Wilson's sort of comments here. I mean, look at this in terms of a rejection candle. This is brutal. And, you know, we really have always been, even though we've called for a short-term rally for Bitcoin, which looks like it's played out, we've always been on the side of more downside, and that is very much the case. This is a huge shooting star. You know, it's natural that Bitcoin's going to rest at these levels. You would have had traders that would have took profits off the table. Having now swept that buy-side liquidity, ultimately, I think the structure that Bitcoin's currently setting up, you know, it looks pretty primed. You're just grinding here. Yes, you could maybe argue that there's some sort of a double bottom here or something along those lines, but you're just grinding here. And I think that this is going to lead to further downside probably this week. We're just waiting for that Lehman's moment, guys. We've done a lot over the past week, looking at everything, making sense of it all, and it really does seem apparent to me that that crash is coming. And we did do some looking at the US 2-year government bond yields, that if they have topped out, essentially, you know, we may be looking at the end of the rate hikes soon. This would have essentially topped out around about 4.87, round about this region, and rates are forecast at 4.25, so there's not much longer to go in terms of the hiking cycle. The issue is, of course, is that usually when the Fed reverse Fed funds, it's on the back end of a catastrophe. You know, they have to have a reason to do it. They're not going to bring down interest rates when inflation is this high. 7.1, there was a bit of disillusion with markets rallying in the face of that, because 7.1 is still extremely negative. Certainly if you've got the Fed's target at 2%, that means there's a lot more, and certainly BlackRock were predicting a 2% fall in GDP for that to actually be fulfilled. That's still to come, guys. And this is obviously something we've looked at 2008 versus 2022. You know, you're looking like you're just following 2008's kind of S&P playbook, and we've still got this big leg lower to come. I can't help but feel like most stocks are probably going to round trip all the liquidity that was pumped into them from March 2020 onwards. So we're still extremely elevated from this printathon. Now, if you think about all the money that was printed, you know, the problem that you've got with what the Fed are doing is a lot of that money is now being redirected, this whole concept of liquidity that we've spoke about, back into the debt markets, which means, and also if you look at personal savings rate, it all points to a very negative foretold recession that we are now entering and is likely going to get worse. So from an investment point of view, we've kept everybody out of the market. We got some extremely juicy prices from the in regards to the likes of Cardano and a number of other things. You know, we looked at this recently in regards to calling for more downside. We have now run 26 cents. You know, you're getting some really discounted cryptos. And I think cryptos, I think if we didn't have the FTX spill, this would have been a more significant run, but it would have found its way back down here anyway. You know, crypto didn't really appreciate from the dollar weakness that we got. And we saw obviously all the stock market really appreciate off the back end of this. Crypto didn't, and it didn't because of cryptos are rather confusingly in blue here, or Bitcoin, and then we've got the stock market. You know, you can see the stock market did well. Bitcoin, of course, looked like it wanted to do well, but had the FTX crash sort of, you know, take away from it. The problem I've got now moving forwards is it looks like the dollar's going to reassert. The dollar's very, very correlated with the US 10 years, which I think is going to go up. I think that this is likely topped and is likely going to see further downside, which obviously ties in with what we're talking about in regards to interest rates going up. You know, they're only going to get probably to this level here or near it before topping out and plateauing. And then we're going to get that sharp reversal. But that sharp reversal is going to come on the back end of something going seriously wrong. And unfortunately, that means more downside for the cryptocurrency market. It's just a matter of time, in my opinion. You're still very much doing what you did over here, and we've got this big leg lower, I think, to take place. And where this takes us, whether it's 12K, 13, is yet to be seen. In regards to news, there is some speculation that MicroStrategy may have moved 6,500 Bitcoin. I actually can't confirm this yet. This was the tweet. I retweeted on my Twitter so that people can find it. Anybody that's not following me already on Twitter, @RealAllInCrypto, is my official Twitter. We've got, of course, US Senate backing or banking chair floats a possibility of banning crypto. So this has always been a massive threat to us. I don't think they're going to ban it. I think they're just going to regulate it and use it for their own. I really do believe that FTX and Sam Bankman-Fried was a Trojan horse. And of course, last week we had so much Binance FUD. They've handled it brilliantly. But I can't help but feel like Binance is a real target for the sort of traditional financial world, because certainly for the US that want to be the leader of innovation in new technologies, i.e. blockchain, or they call it DLT, distributed ledger technology, I can't help but feel like this puts a target on Binance's back, and they are going to likely probably use regulations to kind of submit them, if that makes sense. So we've got this real, it's just a negative environment in the crypto space. Certainly as far as price goes and as far as markets go, they're in this kind of depressive state that's obviously caused by restrictive actions from the Fed. We have looked at when we think rates end. I think 2023 is likely going to be the year that we start buying again. But even though, looking at Cardano, for example, we've got this real discounted price. These are prices that many would have dreamed of. But I still can't help but feel like it goes lower. And this has always been the mindset for us. We're looking at that 18 cents range. I think everything is going to get hit, guys. It's not a cheery tune that I'm singing here, but it's a real one. And you guys get nothing but genuineness from this channel. If we look at GBTC, for example, this is round tripped. And I think this essentially is the sort of roadmap that crypto is following. However, why is Grayscale Bitcoin of interest? Well, for me, it's because this is a kind of who really buys GBTC, right? It's institutions to get exposure through Bitcoin or through a regulated institute to Bitcoin. This has pretty much round tripped. And the question I ask myself is Bitcoin just following this? Yes. However, Bitcoin hasn't quite got as low as we've seen GBTC. However, I think this is because of retail involvement. I think if this was purely institutional, they'd have dumped. I don't think that we've seen capitulation for Bitcoin yet. To me, this looks very structured. It looks like people getting out, deleveraging, big deleveraging here, the bulk of it, and then they've been deleveraging the whole way down and taking tactical longs and shorts. And I think the S&P also, this is tactical. So this is a tactical long that Mike Wilson called to get out of, looking for that next leg lower. I don't feel like we've seen capitulation yet. And capitulation is what we're looking to buy or initially put a buy in. And I think you're looking at a round trip or at least coming back to pre-March 2020 levels for the S&P. You're looking at between 3,300 and 3,000, in my opinion, as a target. What happens if that happens? Well, of course, the cryptocurrency market is likely going to go with it. I just think with all these rallies that we've had, and it's why we likened, even though we were very public in calling for a rally from down here, one of the only people calling for a rally when we were down here, by the way, we drew all these levels and we said, look, we don't know how high this is going to go, but if you're going to long this, you're playing Russian roulette. The gun is loaded. That downside is set. But hopefully if you were long in this, you were getting some sort of a... you were hoping not basically to be the unlucky one that pulls the trigger and of course gets the bullet. But we have seen this downside now. It's very natural that you're running back into these levels and you're going to find some sort of support. What you're really looking for is some sort of structure that's going to allow you to now short this, I think. So you've got a bit of a double top here or double bottom. Maybe you get a little rally into this liquidity before then taking this to the downside. And I wouldn't even bet on that rally. Very much on the side of shorting here. Altcoins are looking ripe for the picking in terms of shorts. Yes, there still is that bullish divergence that we spoke about a while ago. but it's looking very much short-lived, in my opinion. And it's looking like it's probably played out. So if we go on the weekly to show this best, you know, this was the bullish divergence that's made us think at 15K, right? You're probably going to get a rally here, but it's weak. And I just want to point out that in terms of highs, this is very, very much, yeah, you might have broken this trend line, but it's still a lower high than this one, which is showing me that this sort of bear market is very much intact, in my opinion. So we're ultimately, you know, a bit of a short and sweet one, guys, expecting more downside. What crypto does in the short term going into Christmas. We're going to take a little bit of time off in regards to day trading. But we will be back. I think ultimately, you know, I wouldn't want to be caught long in regards to this market, even though you've got these discounted prices, because what people don't understand is actually how price works, right? It's essentially all about people buying and selling, right? And if there's more sellers than there are buyers, it doesn't matter how many people are hodling it or this. It's all about what's trading on the markets and where the price is getting moved as a result of it. So, for example, Bitcoin its price probably moves off a couple of percent of its overall supply trading back and forth. Doesn't represent the whole amount of Bitcoin that people are hodling, etc., etc. And that supply crunch, when supply is readily available by sellers, doesn't come in. The supply crunch really comes into effect in a bull market, which we are definitely not in. So I do still see lower prices across the board. S&P is just waiting for that Lehman's moment. Gold's not doing too badly. Although, I'm not sure I would take the long on this. And of course, the dollar, I think, is now set to reassert. You know, certainly if you look at its pairs, if you look at the US 10-year, which has been very correlated with it, it's looking like it's going to want to reassert. You know, this is certainly a short-term bottom, and what we get out the end of it, or what we get in terms of a move to the upside, is really going to be very telling. That's all I've got for you in this video, guys. You enjoyed the content, like as always, appreciate it. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching.